Hi, Tuesday, August 9th, 2016. Maneko 64 here, home of alternative economics and contrarian views. Just seen an article in the FT, headline in the FT.com, and it says, Bank of England bond buying hits snag. So, and I quote the story from 2 hours ago. The Bank of England's revived QE program. Yeah, they revived QE last week at the last Bank of England meeting. They said they're going to buy 60 billion in government bonds over the next 6 months. So I continue. Revived QE program has run into problems on its second day of operations as investors refuse to part with their gilts. The Bank of England had hoped to buy 1.17 billion of gilts with maturities exceeding 15 years on Tuesday as part of a mass bond buying scheme policymakers hope will cushion the UK economy from the worst effects of Brexit, supposedly, that old scapegoat. And it goes on to say, however, investors offered to sell the bank just 1.12 billion. I know it's not that much less, but I think it just shows you the laws of unintended consequences, and it just goes to show how central bankers really don't know what they're doing and don't live in the real world. Why would pension funds, investors, in a world where it looks like, interest rates could keep dropping or even go negative, why would they want to sell something that actually is giving them a return or a yield? So this is a pretty, I've never heard this before. Usually, treasuries or governments, sometimes they, when they're selling bonds or issuing debt, sometimes, they won't cover the auction. Let's say they want to sell $2 billion worth of 2-year notes and they only get 1.8 billion, there will be, the bits cover will be below 1. You hear of that, but I've never heard of this before, where a central bank is trying to buy bonds from people and they telegraph them, when they're going to buy them, how much they're going to buy them. You could see a point where the Bank of England is going to have to pay through the roof for these bonds, which will mean even lower rates and even more difficulty for banks. They don't even understand that. You lower rates like that, UK banks will have difficulty, making money, because banks make money borrowing in the short term and lending longer term, or buying, longer term bonds. But if there's no interest to be made, it's actually going to hurt the banks. And if they want banks to lend, how is that going to help? So quite amazing. It just goes to show, how out of their minds, in my opinion, they are. So, and it goes on to say here, for the next 3 months, the Bank of England plans to buy gilts on Monday, Tuesday, and Wednesdays, dividing purchases into maturity brackets of 3 to 7 years, 7 to 15 years, and over 15 years. So they're telegraphing everything. So quite amazing, in my opinion. I think we'll hear a lot more surprising snags in relation to this, and I'll keep an eye on it for you. So it's that old saying, those who the gods destroy, they make mad first, something like that. So if you enjoy my videos, please like, share, and subscribe. You can also donate to my channel. I've got a PayPal link, Bitcoin address below in the description, and also Patreon. Take care. Bye.